as I said, welcome to this annual conference. This year you've seen it's online. I don't know, for the people who have spend a bit more time with Yesterop, normally it's in person, but we don't know why it's online. Next year, already telling you, we'll repeat during the day. Next year is going to be in person in Italy, so we are really looking forward to that. But this year it's going to be like this, and it's going to work as well. Who is leading the organization of this event? It's going to be very nice. We have lots of nice speakers, moderators, and keynotes. Then I will briefly introduce Ronnie, or maybe Ronnie can introduce himself. He will be the moderator for the talk in the afternoon. He's leading the podcast, and so he's great at doing that. Do you want to say a few words, Ronnie, maybe?
Of course, thank you. And shall I just take over and we get started? And welcome.
I just wanted to say, you mean to start the panel discussion?
Yeah, whenever you feel appropriate.
Yeah. So maybe first something during the whole event. If you have questions, don't hesitate to ask it in the chat. There is on top of that a breakout room. So if you need to discuss something a bit more specific, you can join the breakout room, and then there will be someone from the team of Yesterop that will join the breakout room as well, and that will try to answer your questions. Do you already have some questions now? Okay, so just briefly, a brief recap of what is going to happen during the day. Tell me later if it's wrong, but we're going to start at 1 with some panel discussion. So we're going to have some panel discussion until 2:30, and then at 2:30 there will be a presentation of Yesterop, our activities, what we do, and then some more panel discussion until 6 p.m. Then there will be a break between 6 p.m. and 7 p.m. And at 7 p.m. we'll start the evening session, where you will have the opportunity to interact with people from Yesterop. We'll discuss a bit more, delve a bit more into what we are really doing, what are the different teams, what are the opportunities to join Yesterop and to act together. And this will be between 7 and about 9. Essentially, there will be some presentation between 7 and 7:45, and from 7:45 until 8, 9, you'll be able to join breakout rooms and really talk with the people, see, okay, what can we do next? Yeah, I think it's the one.
Yeah, we're already
Yes,
go. I think Ronnie, you can take over.
Thank you.
Yeah, okay.
Thank you, Nina.
Thanks, Ronnie.
No problem. Welcome everyone to our afternoon session. And as Dimitri just introduced, we are going to have a very exciting session. We are going to hear from entrepreneur, from CFO, from VP, from the very practitioners of energy policy and technology, and all the frontier topics around it. And we've been working very hard to have the people with the right experience to come and share their knowledge with us. So I personally will be very, very excited to hear from everyone, and I will be with you for the moderation for the whole afternoon. And for that, I will give a very brief introduction of myself. I'm currently a board member leading the knowledge sharing practice at Yesterop. I'm also a full-time quantitative researcher at BlackRock. And while in the meantime, I'm finishing my PhD in energy and environmental engineering at Imperial College. So I'm very, very interested and looking forward to all the talks this afternoon. And to start off, we're going to have a very exciting panel discussion. And for this panel discussion, our topic is going to be focused on one of the hottest topics within the world of energy and climate, which is climate sustainable finance. And for this panel, we have 3 guests. And let me just spend a few minutes to walk you through their profile. Now we have Alba, Rebecca, and Valentina. Alba is the co-founder and head of growth and chief climate officer at Seeds. And Rebecca is the director of sustainable finance at South Pole. And Rebecca has had 20 years of finance experience in different institutions. And finally, we would also have Valentina. Valentina is currently an associate in the Supply Chain Emissions Initiative within Climate Intelligence Program. And first off, I would like to invite Alba to give a more detailed introduction of yourself and perhaps what you do in your work, and also, what exactly is sustainable finance from your perspective.
Sure. Well, first of all, thank you, Ronnie, for the introduction, and thank you all the team of Yes Europe for organizing this event. I'm very excited about it, especially sharing this discussion with Rebecca and Valentina. So I hope you find it interesting. I will give you a very brief overview about myself so that you know who I am and what I'm doing here. So let's start. Yes, my name is Alba. I am from Barcelona, and my background is in industrial technology engineering. I also have a double master's degrees in renewable energy. And during my studies, I've been abroad a lot. I did an exchange in the University of Cambridge. Then I was doing an Erasmus in Italy, in Bologna. And then I spent the last year of my master's in Stockholm, Sweden, where I was studying at KTH, the Royal Institute of Technology. And well, overall, this has been it's been a journey, and it's been very enriching because it gave me the chance to really embrace change, understand other cultures, and also learn other languages. So overall, it was a great experience. Going on to my professional background, I have experience as an energy consultant. I was working in a small company called Edenway, where I engineered projects which are related with e-mobility, circular economy, and energy efficiency. This really gave me great insights about everything going on in the industry. And after that, I co-founded my own company. It's called Seeds Renewables. Probably you do not know about it because we are still small. But basically, we are a climate fintech platform through which you can invest in renewable energy projects through crowdfunding. So that's what the company is about. We are trying to shift the role of the public from neutral bystanders to active stakeholders and to fuel the energy transition. My role inside of the company, as Ronnie said before, I am head of growth. To shed some light on that, because the name is not very self-explanatory, I basically source the renewable energy project pipeline, so the projects in which users are going to be investing in. And then I'm also leading the technical due diligence. This means that I make sure that the projects are both technically feasible and obviously economically viable for us to invest in. And then as Chief Climate Officer, what I'm doing is quantifying, reducing, and offsetting or removing the emissions, unavoidable emissions in case of offsetting and removing of the company to be carbon neutral on a yearly basis. For us, that is very, very important. And then I would also like to end my introduction with some personal background as well. I entered the sustainability space out of passion, and in my free time, I love to organize and participate in volunteering events related with both climate justice and gender equality. So, for example, I love to participate in many workshops, events, and I also organize some beach cleanups, day cleanups, etc. So that's kind of in my field of interest. And then before we move on to Rebecca's introduction, I also wanted to give you like the definition of what sustainable finance is and what sustainable finance actually means to me. So basically, well, I guess we're all familiar with the definition, but it's just referring to the process of taking environmental, social, and governance considerations, that is in short ESG, into account when we make investment decisions. So that would be what sustainable finance is. According to the International Renewable Energy Agency, there is a huge financing gap. This means that in order to stay below 1.5 degrees Celsius, we need to scale up the investments up to 1.1 trillion US dollars per year between 2021 and 2050 over the planned energy scenario. This is there's a huge potential there, and that's why I think sustainable finance is that important. And that's actually one of our goals at Seeds. What we want to do is cover a portion of that energy financing gap by making every transaction an investment in climate action. So, well, that's why this topic today is so important, and it will be more and more important over the upcoming years. So I hope our experience can be useful for you and that you find this interesting.
Thank you, Eva, very much. And now we can move on to Rebecca.
Great, thank you. Hopefully you can hear me well.
We can hear you well, but yeah, no, it's very good. Go
Okay,
ahead.
good. Thank you, and delighted to be here today. Thank you so much for the invitation, and happy to be with my fellow panelists too and listen to them with lots of knowledge I'm sure they'll be sharing. So a bit about me. My name is Rebecca Self. I am originally from the UK, but I'm based in the Netherlands, close to Amsterdam. Have worked very internationally too. I have close to 20 years of experience in the financial industry, and 10 of those years were at HSBC, where I was the CFO of Sustainable Finance, which meant I had a balance sheet, an income statement, a business that I was responsible for. And maybe for background, how I ended up there, very briefly, I usually describe it that sustainability found me rather than I found it. And post-financial crisis, this was about 10 years into my career, I really had a very big wake-up moment about the financial industry, about banking, and about the role that the industry was playing in society. And so at this point, I started to pivot my career towards regulations, towards governance, so much more on the G of ESG, environment, social governance. And then I became really interested in the E and the S, and this was a relatively small part of my role at that time, about 8-9 years ago. And gradually it became bigger and bigger. I started studying in my spare time. I did a master's in my spare time at the University of Cambridge, until about 5 years ago, it was a full-time job. And I was asked to work on various different disclosures and take over this area for the bank. So it's definitely been a journey. I was nodding away as Alba was talking. I certainly noticed that myself. And again, back 8 years ago, no one was that interested in this topic, I'll be honest. Lots of colleagues, when I was at the bank, thought I was completely crazy. They said, this is a career limiting move. No one's interested. It's nothing to do with finance. Why are you talking to us about this topic? And I'm blown away. There's an incredible amount of momentum now. And for those of you who are familiar with the tabloid newspaper, The Sun in the UK, yesterday in The Sun, there was an article about Prince Harry and Meghan and about some investing and new roles they have in impact investing. And they're actually, it was sort of going a bit down a greenwash line, this particular article. It was quite sensationalist. But I was just blown away. I thought, never did I think I would ever read this in that kind of paper. So just incredible to see the amount of momentum around this topic. I think when I think about what this topic means to me, it's about integrating those environment, social decisions into financing, lending, investing, and so on, and really about shifting to the long term. I think traditionally finance has been very short term in nature, huge amounts of value paid to nanoseconds with the case of high frequency trading. And that's almost the opposite of what sustainable finance is to me. It's really looking at these decisions and looking at what they mean in 10, 20, 30 years. What are the negative externalities around decisions where finance and capital is put? So looking in a much more holistic way. And two sort of very brief comments, again, before I finish up the intro. I think number one, there is a role for regulation in this space as well. So for sure, the financial sector is a key lever, but also having that policy environment. And I think we all remember well what happened when the financial sector was allowed to regulate itself. So let's just keep that in mind from sort of 10 or so years ago. And the second is, again, bringing in that long term. There's one of the Greek proverbs that a society grows great when old men plant trees whose shade they'll never sit in. And for me, again, this is something that I think about with sustainable finance. It's about the decisions that we make today with lending and investing, but the outcome might be very far in the future. And it's thinking through what those potential outcomes might be and being very thoughtful about that with those lending and investing decisions that we make today. So I'll pause there. Thank you.
Thank you, Rebecca, for that insightful introduction. And now can we move on to Valentina?
Sure, thank you. And thank you everyone for being here today with us. And I'm very happy to have been invited to this event and very happy to share and exchange some knowledge with my fellow panelists. My name is Valentina. I am currently an associate in the Supply Chain Emissions Initiative within the Climate Intelligence Program at RMI, former Rocky Mountain Institute. We are a nonprofit that works to transform the global energy system to secure a global, a zero carbon future for all. So that's the mission of the nonprofit. And I joined it in March. So it's been a very interesting path so far, and it really shaped my my understanding of this field as well in a different way. So before I get to that, I'd like to give you a little bit of an overview of my background. I studied economics and business administration in my bachelor studies, and then proceeded with a master's degree in international development and international affairs. That stemmed from the fact that I had always been interested in sustainability, and of course, the idea was to try and find the intersection between economics and business administration and sustainability. So that's what that master's represented for me. And I have to say, my interest in economics and sustainable finance grew and took shape thanks to mainly my first experience at the UN, at the United Nations, inside the Sustainable Stock Exchanges Initiative. I was a research and communications assistant there, and that experience gave me a first understanding, a first point of touch with the sustainable finance industry. I got to learn a lot about how stock exchanges were trying and are trying to make to shift, as Rebecca was saying, the mindset from a very short-term kind of propension to a more long-term mindset to generate positive social and environmental impacts with the investment decisions that these stock exchanges and companies are making. My understanding of sustainable finance also was very enriched and grew up following experience at ETH. I was a research assistant inside the Energy Politics Group. There we analyzed over 130 initiatives, sustainable finance initiatives. We looked at the system, trying to understand how these initiatives were shaping their theory of change. So we developed a framework and then analyzed and assessed these sustainable finance initiatives. We looked at those starting from two considerations, from two axes. On one axis, we had risk versus value. And on the other one, we had real economy versus secondary markets. And it really stood out to me how many of these sustainable finance initiatives were mainly approaching the issues they were tackling from a risk perspective, and also mainly dealing on the issues from a secondary market, financial market perspective. So never really, acting in the real economy. What I like about RMI and the work I do now is that we propose market-based solutions. So we really work to transform industrial supply chains and to help companies reduce their emissions along the supply chains. So my experience in the past also was about sustainability reporting. That was thanks to an experience at WBCSD, the World Business Council for Sustainable Development, where I participated in the Reporting Matters project. And there I really started to understand how sustainability reporting is a very fragmented space, and sustainability disclosures can become really complicated. So that's also when I realized the importance of data and robust disclosures. Coming to, that was a little bit of my professional background and academic background. Coming to what sustainable finance means to me now. As I was saying, my understanding really changed in the past couple of years. I would say for me, sustainable finance is, any financial transaction or product that generates positive environmental or social or positive social impact. It's about creating social inclusion and environmental benefit through finance and the financial system. It is about directing the financial tools we have in place towards investments that promote decarbonization, direct decarbonization. And, this kind of finance for me has the power to change procurement practices in industries, especially the hard to abate industries, but also to redirect purchasing power of consumers. So to conclude, I would say that when we talk about sustainable finance, we could be speaking, about a financial product, so like green bonds or ESG funds and indices, but also about microcredits to small or medium enterprises in the global south. And we're also talking about sustainable finance when we talk about banks and financial institutions committing to net zero targets, as well as companies committing to net zero targets. So yeah, it's a really broad field, and I'm happy to dive into the discussion, bringing different perspectives to the table.
Thank you, Valentina, and thank you all for sharing how sustainability had found you, or you have found sustainability. And given your very diverse background, I have one question that's very attractive to me, perhaps to all the audience as well. What exactly, is the type of sustainable finance that we would want for the next decades, to reach the goal of net zero or for energy transition? And more importantly, how are different stakeholders, the banks, the stock exchange, the entrepreneurs are doing to realize this goal? So I'd like to kick off this question with Alba.
Sure. Well, if you want, I can give you a bit of the startup perspective, because that's where I'm coming from. So what we need, well, this is a bit related with what Valentina was saying before. Sustainable finance is not only about investing directly or only about banks. It's a very, very broad topic. And that's why I want to center it to startups. And what is very important to me, for example, is to be able to allow everyone to participate in this discussion, and to be able to make everyday people like us, for example, as individuals, also to take part in this transition. So that's why, kind of tied to what I'm doing at Seeds, is we want to democratize, decentralize, and incentivize this energy transition. So for me, it is important that this narrative doesn't only stay in the company, bank level, etc., but also allows individuals to invest and to be able to participate in this transition. It is complicated because starting to invest is hard. You need to make a lot of research and to understand well what you're getting yourself into. But yeah, I think that it is important that there's a lot of initiatives related to this, but it is important that everyone is allowed to participate. And that's why I want to highlight these initiatives that allow users to start investing in ESG funds, for example, or like
Seira?
I was reflecting as you were asking it back when I
How are you doing?
Good. Are you?
Good too. I was just checking if I can join the breakout room. I think nothing happened in the other call, right?
Sorry?
Nothing happened in the other call because I just went to the breakout room.
Okay, yeah. Or the recording was stopped, I think.
Ah, shit. Okay, yeah, so I need to stay in the main room as much as possible.
Yeah, or you can put like Dimitri on the main, yes.
Yeah, okay. Okay, sounds good. See you then.
Yeah, I'm gonna be here, so.
Okay, sounds good.
Donut economics and Kate Rayworth, where you have a much more holistic economic system where you live with, and we, the planet, we live within certain boundaries. So I think there's lots of different views on how the system may look in the future, whether that's something more incremental from today or something with more change, and we'll see. I think one thing's for sure, if the longer that we go without making changes to the economic system today, the more radical and more extreme the change will be when we ultimately get there. Because simply a lot of the negative impacts around climate change will be baked in. So we'll have a much more serious problem to tackle if nothing's done. And then just taking that point on stakeholders. So with some of these new visions of capitalism, with donut economics, stakeholders featuring and these different areas. And some of that is around talking to the different stakeholders for a business. So, for example, the regulators, customers, employees, and so on. But also thinking about the stakeholders that represent different areas. So one question I've often posed myself is, who's the stakeholder for the planet? Who is it that represents that? And it's probably a whole series of community groups and non-profits and all sorts of other people, but definitely stakeholders, different views, different perspectives, really important. But it's just worth thinking through with a framework who exactly those people are for a particular business in their context.
Thank you.
Thank you.
Thank you. That is really insightful. And Valentina, what's your take?
Yeah, so I really agree with what Rebecca just said. I think it's hard to say who is really, representing the planet, who is the stakeholder for the planet. I think different actors in the field might have different, perspectives and come into play with a different vision and different motivations. But I think what is important, what really matters, is that ultimately we mobilize finance to meet the decarbonization targets that we have set for ourselves. So I think we need banks to evaluate their portfolios for them to be climate aligned. We need companies to set climate targets that are trackable and achievable. So in general, we say we need big financial players to mobilize and set standards that they can practically achieve and monitor against, both on the equity and on the lending side. Of course, the main issue with this is data and the presence and the availability of comparable, transparent, and reliable data. That is what I notice on a daily basis at work. And I would say, like, a good example of actors mobilizing in this field is given by the Poseidon principles. It's a set of principles that banks committed to. It's a framework for evaluating ship finance portfolios. So, I would say in that case, it's a great commitment. It's a very good commitment by banks, which evaluate the carbon intensity of their portfolios and establish whether they are climate aligned or not. And then they disclose on those portfolios. And of course, act in consequence, like as a consequence, they act and probably divest or change the interest rates of the lending they're giving out. So I think that is the sustainable finance we need. But of course, we need it to be backed up by very strong data, comparable data that is reliable and allows us to establish a baseline for keeping track of the progress against climate targets that companies and banks set for themselves. And so, yeah, I think the challenge is really in bringing up this reliable data and also establish the pathways and metrics to then evaluate the finance that is mobilized for climate targets.
Valentina, you touched on a very interesting point, which is data and probably reliability of the data. And like we've heard about reports that some of the green bonds, for example, issued by maybe oil companies that has been used to, invest in projects that's not exactly green. And so there's like being a rising, awareness to verify or to confirm that the money or the data you claim to be green is actually green. So what kind of, gap is there, and what can we do, to facilitate this verification process to make sure that wherever they claim it's sustainable finance, it's actually sustainable and green? And I want to start this question with Valentina.
Yeah, sure. That is an excellent question. I think we need to work with industries and companies directly to source primary data, because we cannot allow to proceed with industry averages or emission factors that are based on industry averages. We need to start gathering and working with primary data, asset or product level data. That is what really we advocate for at Climate Intelligence. And we are working with, we already have some ongoing pilots to source that primary data. So we also advocate for a very harmonized carbon reporting, carbon accounting framework. That is what COMET does. That's the Coalition on Material Emissions Transparency. We advocate for a harmonized framework that builds on the GHG protocol, but that gives reliable sector-specific guidance, because what we realize is that companies do not have guidance when it comes to reporting their emissions, especially when it comes to scope 3 emissions, because those are the most difficult to report and keep track of. So I think this has become really evident in recent months. I remember reading an article on a study that was conducted by the Boston Consulting Group. It found that over 90% of 1,200 companies assessed reported their emissions wrong, and over half acknowledge an error rate of 40%. So that really makes evident that we don't have the right data at the moment. It's really a very complicated field. It's difficult for companies to report and to keep track of their emissions. And so we need to look at data differently, to work towards harmonized frameworks that, with the hope that they will become mandated. So that policy and regulators will mandate those climate disclosures in a harmonized way, so that companies have a more clear guidance on how to report those emissions, and hopefully these errors are reduced over time and eliminated eventually.
Thank you, Valentina. And before I pass this same question to Alba, I'd just like to remind our audience here that feel free to pose your question in the chat box, or save it later. We are going to have an open stage to the audience for the questions as well. And now, Alba, what is your take on this question?
Yeah, I mean, it is a very interesting topic indeed. The statistics that Valentina shared about the Boston Consulting Group are kind of scary. I mean, if you think about it, 90% is a lot. Like that means there's a lot of room for improvement there. My opinion is very aligned with Valentina's, actually. I think that it is very, very important to be able to like, in order to be able to actually improve and to manage all of this, we need measurements. We need to have real data that we can base ourselves upon and then just act on it. So it is very important to really standardize to have a framework so that companies can base themselves on this. So for example, if we look into ESG, for example, in my opinion, the main problem is that because we are lacking these standards and these regulations, it's very hard for us to see if we're actually doing a good job or not. So an example would be, for example, ESG indexes are based on exclusion many times. So that means like you say like, okay, in this portfolio, we do not want companies that are doing this and that, for example, weapons. Then you can also follow a single theme way of building those indexes. So that means like, okay, I will only focus on renewable energy. Or you can set the best in class criteria, which would actually mean like you're the best in comparison to your competitors. But that could be, you could be an oil company which is just doing better than the rest of them. So seeing there's this way of handling these indexes is kind of scary as well. So it is very arbitrary, and it's very hard for you to know as an investor if this is actually complying with your standards. So that's why I think that having a more regulated framework would allow people to trust more and to know where their money is actually going. So I still think that we are starting with this, and obviously, you know, like it takes some time for us to be able to set those standards. It is definitely, we're taking steps towards the right direction, but I just think that those standards need to be there in order to make it more trustworthy for all of us to invest. So yeah, I think that there is a huge need on that as well.
Thank you, Alba. And Rebecca, how do you think we can close this gap?
Yeah, thank you. And again, I'm a firm believer, as with Alba and Valentina, around the importance of this data. So we need transparency. We need to make evidence-based decisions. And for example, that means carbon emissions associated with companies, with investment portfolios, the diversity of employees at particular companies. So lots and lots of different data types. In this context, which are needed. And it's very hard, for example, to set a CO2 price for a company if you're setting an internal price, if you don't know what your emissions are. You can't really do that. So this data really is a building block. I think one point I would say is it's important not to let perfection be the enemy of the good. So again, just sort of picking up on what was said, is it better to be sort of 60% correct and maybe not have a complete scope of carbon emissions for a business, but to get started, or rather wait for 100% of the scope and for, you know, way more precise data, but that takes 5 years. And I would argue it's better to just get started, and it's not going to be perfect in the first instance. That can be noted in footnotes, it can be noted in basis of preparation that sit alongside disclosures. But I do think there's a real value in getting started, even though that data may not be perfect, because I have come across many times where data is used as a bit of an excuse to delay action. And you can spend years and years and years and years and years waiting for perfect data and not do anything. So my personal take is better to start and acknowledge that it might not be perfect in the first instance. And that also brings me on to the role of accountants. And I'm a chartered accountant by background, work with financial institutions and very often CFOs. And what do we do with financial data? what do we do where it's unreliable or we're unsure? We have auditors and we have accountants who come in and assure, and accounting teams. And there's various books, Accountants Save the Planet. And I would love personally for accountants to be a bit more ambitious in this space. You know, I think there's a real role that can be played there around assuring the credibility, the rigor of this data, verifying, use of basis of prep and accounting techniques that we use every single day in financial accounting. Why can't we apply the same thing to ESG and to sustainability?
That I want to ask a very quick follow-up question on that. You know, I've seen, you know, some emission accounting from, say, EY or other companies as well. But what's the, you know, the business opportunities that's created out of this? Because this is a huge gap to account for the emissions. And what's the business opportunity, and who do you think, you know, is like capturing this at the moment, Rebecca?
Yeah, I think it's a bit of a mix today. And also I mean, there are lots of standards around IFRS, international accounting standards, what's assurance, limited assurance, audit, all different types. But again, this is my personal take. I'm not quite sure the existing standards are fit for purpose for ESG and for these other non-financial metrics. So I think firstly, there's business opportunities around doing that work for sure. Training, I think, is another, because I think there's a whole lot of upskilling that needs to happen within the accounting industry. So I spend quite a lot of my time doing awareness raising and talking to colleagues, talking to other accountants. I'm quite involved with my accounting institute on that too. So I think there's the verifying itself, there's the training and upskilling, there's the standards as well, and thinking through how these standards may change in the future, the accounting standards. So lots of opportunities, but it's going to be lots of different groups, I think, looking at different lenses on this topic.
Thank you, Rebecca. And that's a lot of me asking the question. And I would also like to open the stage to our audience. Any question you want to ask around the topic of sustainable finance? You can just open your mic and ask the question directly if you have one.
While we wait until people start asking questions, I just wanted to go back to what Rebecca said about perfection not being in the way of progress. And I just wanted to say I completely agree with that, because I sometimes have the feeling as well that just looking for that perfection is the excuse of not moving forward. So that's why, like I said before, that we have to acknowledge that that we're going towards that we're moving towards the right direction, and that we are taking very significant steps, because we're coming from a place where profit really was taken as the most important thing, and then environment, social issues, governance were not part of the discussion. So we've come a long way. But yeah, just to acknowledge that the system right now is not perfect, but that there's room for improvement, but still that we should not use that as an excuse not to continue doing what we do. So I think that was a very, very good point from Rebecca.
Sure, thank you. Valentina, do you want to add something as well?
Yes, thanks. That would be great. Yeah, I completely agree with what Alba just said, and also with Rebecca. I think we're already at a stage where data is, not perfect, but companies are working on it, and that's where the business opportunity, I think, will come from. So I think there's really a chance for leading corporates here to lead the rest of the market, to invest in decarbonization efforts along their supply chains, to set ambitious goals. So I'm thinking, for example, of ArcelorMittal, the steel producer. They recently produced, it was not really, they produced green steel, but they sold some bundle certificates based on avoided emissions from some efficiency projects. And they immediately went sold out. So there was a very good demand signal from the market there, and there is for sure, I believe, scope for more efforts in in direct green steel production. And along the same lines, I would say there is a big business opportunity for other leading companies setting ambitious goals. I'm thinking of Volvo setting scope 3 targets for 2050. It's something that's not common, but they have set those ambitious goals. They're going to work on those. They're going to refine the data they have available. They're going to create an ecosystem to make those that data better and better. And I think the aim should be a data reduction effort. So closing the gap on quality data and strive for more and more reliable data, transparent data. And that's why I believe that standardization and harmonization would be essential tools, because they allow us to take the subjectivity out of climate disclosures and just reporting of emissions.
Thank you, Valentina. And I think there's a question from the audience, which is kind of like an expansion for the challenge that we are facing in data. What are the other main barriers or challenges to drive investment towards sustainability? And Rebecca, I'm gonna open up on this question.
Yeah, happy to. And maybe two broad comments. I think the free market is really great at solving problems. So if there's a clear problem and there are opportunities, commercial opportunities, the free market is very good at filling those gaps. But today, there's no CO2 price, for example, there's no carbon tax. And quite often there's a perception that sustainability is a cost, and it can sometimes cost more. So it means that for the market to solve that opportunity is quite challenging. So I think one very simple, well, I say simple, one example is simply to have carbon taxing and carbon pricing. And I think then if we, the planet, had that at an appropriate amount, or certain countries did, as they do now, and it's increasing, very quickly the market would respond to that. And investment would drive into, even more investment would drive into some of those low carbon or transitioning areas. So I think there's something in the market conditions and having the right market conditions to really accelerate and scale sustainable finance. And I think there's a bit of a gap in those conditions where we are today. The simple one being CO2 pricing. And then sort of a second point is, and it sort of picks up on some of what was spoken earlier, the market isn't sort of moral. It doesn't have particular values of its own. It's sort of looking for those opportunities and gaps and commercial opportunities. So I think there's a question probably for all of the people that participate in a buying products and participating in the economic system, what is the values associated with this economic system? What values do we want to live in or have with the system which we're participating in? And I don't think the market's going to solve that on its own. And data isn't going to solve it on its own. And sustainability frameworks aren't going to solve that on its own. It's really a much bigger question around what type of economic system do we want, and what values are important to us and the planet in the future. So I think that's a much bigger, more forward-looking question. The market's not going to solve that, in my view, on its own. That's not its role. So it's really for the ecosystem around finance to think that through.
I agree. Thank you, Rebecca. In the short term, the market mechanism to provide the right incentive, and in the long term, it's probably we have to rethink how we value these things. And now, Alba, what's your take on this?
Yeah, I think that having regulations or policies in place, such as, for example, carbon tax, can really incentivize companies to move towards impact. to move towards a position where the environment, for example, is more important than profit, just because they will be very tied and linked together. And if we think about it in a way like having ESG values, for example, also means that a company is more efficient at what they do. Because with less inputs, you can achieve more outputs, if we put it in a way, you know, like, for example, in environmental concerns, that's where I'm coming from. That's kind of my field. I just see that doing the same thing with less resources is showing that a company is much more efficient at what they do. So we're lucky, because I think that profitability will be very tied with sustainability. So that will make the market move towards this, just because it will be profitable to take sustainability into consideration when looking into finance. So I just think that we need more regulations in place or more policies which make this not a choice but an obligation. And really, we are at a point where we don't have any other option. We either go for this or especially from an environmental perspective, things cannot proceed. So I'm just very hopeful, because I have the feeling that in the end we will just there's a trend towards this direction, but there won't be an option to do anything else.
Thank you, Alba. And Valentina?
Yeah, I really liked Rebecca's answer to this question. I agree, and I am also hoping that, you know, the right ecosystem is arising, and that we are setting the tools that we need to get to that ecosystem in the short term future. So I think, going back to the question, I think cost is a huge barrier to driving investment in sustainability. There are usually very high initial capital costs, which not all investors and companies can bear. So that's for sure an obstacle there, and also a big element of risk, which can prevent investment towards decarbonization projects. I think that's where public-private partnerships can help overcome some of these obstacles, and of course, with the help of regulation and policy, as Alba said. And I think going back to the point of you know, the business opportunity that arises there, I think here there's the big business opportunity for leading corporates that have the tools in place to invest, that have the resources to invest in these most ambitious projects. I think they can really develop proof of concept for other corporates and other actors in the market to follow. They can, as we say, create a demand signal for climate differentiated products. So for products that we can differentiate based on their climate and their environmental attributes. So, you know, I think it will be a matter of synergies. On one side, creating the demand signal from corporates, and on the other side, having, so of course, the demand signal would also change procurement practices. And on the other side, we would have consumers and customers proving that these products are preferred in the market. So hopefully it will be a synergy of procurement practices and consumer preferences that will allow for this ecosystem to be ultimately created and to be in place.
Thank you for all these insightful sharing. And we have more questions from the audience. One is from Sankar. And the question is, do you think there are gaps between the technical and economic vectors of the sustainable industry? And who'd like to go with this question first?
Maybe I can take a stab if I understand the question correctly. I think this could go back to what I was mentioning earlier. In a way, there are actors in the market that have the economic tools in place, or the resources in place to invest, but probably they don't have the technical tools available. So there could be a gap in the technical solutions available and the resources in place to invest in those solutions. But also, I think in most of the cases, we have the technical solutions in place, but we don't have the resources to invest in them. So as I was saying earlier, I think what could bridge this gap is public-private partnerships supported by governments. I know in the US, for example, there are manufacturing institutes which promote and invest in this kind of partnerships. So, you know, where there are not the resources in place to develop these technologies, these institutes can help develop those through research and development that probably the public or the private sectors alone could not come up with. So I think collaboration is for sure one of the keys to bridging this gap.
Thank you, Valentina. And Rebecca, do you want to comment?
Yeah, I may just briefly. I think one gap that I see, again, I mentioned it earlier, is around the education piece. And very often there'll be people in the financial industry, mainly at very large organizations, who say things to me like, I really want to work on climate change, ESG. It's really important to me, my organization, my investment portfolio. But I don't want to change anything. And I sort of think, okay, this isn't going to work. Because it does require change. And this is a huge topic. So it's great, there's lots of momentum, people are interested, lots of traditional organizations, but it will require change. And I think the scale and the extent of that change, and the extent of the problem, frankly, of where we are today, particularly on climate, I think many people just aren't so aware. So I do think there's a whole sort of education, upskilling piece in there. The other piece is really around mindset. So many of these organizations, more traditional finance organizations, you have small groups of homogenous people at the top of an organization who are making the strategic choices. That's not going to work with this topic, because quite often there's many different perspectives, there's lots of unintended consequences to think about. It's very easy to slip into siloed thinking and kind of shift the problem somewhere else. So there's a problem with let's say on the E, with environment, with flood risk, you price up mortgages in flood zones, or price down mortgages in flood zones, and then you end up with a social consideration. Because put really simply, the mortgages in the flood risk areas are where the poor people live. So you've created an unintended social consequence as a result of a climate action. So there's all these different perspectives to think about. And that mindset shift and having these diverse perspectives is also really important. So I think for me, the gap isn't quite so much on the technical, it's a lot more around the people side of this topic.
All right. Fair. And Alba, how do you think we can close this gap then?
It is complicated. I mean, obviously there's this upcoming technologies like hydrogen, carbon capture, all of this. Obviously it's high risk. It's very, very early stage. I read it in one of the questions as well. So I'm trying to tie the two topics together. I see we're running out of time. So as Valentina said, you know, like public and private compromises and investments towards this kind of technologies are what we need. They are not profitable right now, but they will be in the future. It's the same way that solar has evolved. So for example, investing now in solar and energy efficiency measures is very profitable and very medium low risk. So for example, there's all of this type of technologies which can really accelerate this energy transition and can make the situation easier for all of us. So that's why these high risk technologies which we need should be invested in by public and private organizations who can actually bear that risk. So for example, there's Breakthrough Energy who are investing in all of these kind of projects, and Microsoft is doing a lot in that area as well. So these big organizations who can actually allow themselves to bear that risk should move towards these high risk areas, while the others should focus on the existing technologies which are more profitable for now and are not putting us in a situation where we have to aim for high risk. So it is a way of really just acting at the same time with all of this all of these topics. So it's a way of distributing the investment so that we can move towards a more sustainable economy.
Thank you, Alba. And notice we only have 2 minutes left, and we have room for one question, but with really quick, short answers. And that question is bringing us back to the data reliability. If we don't have high quality data, how do we convince the stakeholders that this is sustainable finance, this is green bound? And maybe we can start with Rebecca, but keep it short, please.
Yeah, and I would say balanced reporting. So talk about the good things, but to create trust, it means talking about the areas that need to be improved and being open about it.
Thank you, Valentina.
Yeah, I agree. I think it's important to be honest on areas for improvement and kind of reassure that work and investment in that direction is being done.
Thank you. Alba?
Exactly. Transparency is key, and also we need to carry that due diligence ourselves. So if we want to make sure that something is fulfilling our standards, we should just do a bit of research on it as well. So the combination.
Thank you so much. And with that, we'd have to close the panel discussion, but a huge thank you to all three of you and to all the audience for the insightful sharing and interaction. And just a reminder that if you have more further questions, please feel free to follow Rebecca, Alba, Valentino on their LinkedIn profile, or share the question with us and we can share with them as well. And with that, thank you again. And we will move on to our next session.